Hello everyone. So I'm Robin Pekru. So currently I'm studying Masters of Management at University of Niagara Falls. And yeah, so today we are going to talk about Introduction to Financial Statement and Health, which is a part of our course for managers, and it is the module 2. So in content we are going to talk about financial statement, sequence of statement, and in the sequence we have income statement, statement of owner's equity, balance sheet, and cash flow statement. So talking about financial statement, so financial statement are usually the written document that outlines the financial information of the organization, and the financial information can be processed to analyze different aspects of the organization, include how the organization is doing or how the organization will do in the future. So it is very useful information for the company as well as the stakeholders. Moving on, we have sequence of financial statement. So financial statement is made in a sequence. So different statement are made in different steps of the sequence. So at first we have income statement, then statement of owner's equity, balance sheet, and cash flow statement. So for income statement is usually the record of revenue, expenses, and losses that are incurred during a certain particular period of time. Income statement is also referred as a profit and loss statement. And income statement can be broken down into different categories, and they can be as revenue, cost of goods sold, gross profit, expenses, and so on. You can check that out here. We have different categories and the explanation as well. So for the statement of owner's equity, so the statement of shareholder equity is about the different aspects about how the income is generated and how it is distributed, either as reinvestment in the firm or as dividend or drawing to the owners. So the key components of owner's equity are common stock, preferred stock, retained earning, treasury stock, and no, and unrealized gains and losses and additional paid up capital. So common stock are usually a type of ownership stake at the company that comes with voting right, and the preferred stock is the stock that offers a higher claim to the company's assets and earning but doesn't come with a voting right. So, and return earning is the total earning of a company after it describes dividend to its stakeholders, treasury stock. So treasury stocks are the stock that company repurchases. This is often done to avoid hostile takeovers or to temporarily boost stock prices. And unrealized gains and losses. The changes in the price for investment that have not yet been cashed in. Unrealized gains occur when the investment increase in value but hasn't been cashed in, while unrealized losses occur with the decrease in investment value. And for additional paid up capital, the excess amount investors pay over the face value of the company's stock. It is known as additional paid up capital. So as for balance sheet, so balance sheet is an item by item breakdown of everything that company owns, including the assets, liabilities, shareholders' equity, and other variable during a specific moment in time. Balance sheet also communicates exactly how much a company is worth, totaling the value to these variables into a single monetary value. So balance sheet can be broken down into three categories that are assets, liabilities, and equity. So talking about the assets, it is what the company own. So it is usually like building, inventory, cash, everything that is listed uh, in the balance sheet, which are owned by the company, are known as assets. So talking about liabilities, so liabilities are the things that the company owes to someone else. So it can be long-term debt, accrued expenses, deferred revenue, or any other kind of loans as well. So and talking about equity, so equity is what is owed to the owners of the company. So whatever money is left after liabilities are accounted for and goes to the owners of the business. This is broken down into categories similar to those in the statement of shareholders equity, such as common stock and preferred stock. And the next one is cash flow statement. So cash flow statement shows how the company uses its revenue. These give investors and shareholders a direct look into how effectively the company is spending its money, particularly in the context of long-term and short-term investment. So cash flow statement can be broken down into three categories as well. So there are financing activities, investing activities, and operating activities. The financing activities include the cash flow from debt or equity financing, while investing activities include the cash flow from purchasing and selling assets using free cash, which may include real estate investment, vehicles, or purchase of non-physical assets such as patents and licenses. And operating activities includes the cash flow that encompasses regular goods and services, include the both associated revenues and expenses. So these are the major things or the sequence that are followed while making a financial statement. So as we came to understand, it is a very important aspects in an organization. Financial statement plays a very vital role, either in the present or in the future. So without accurate data or accurate analysis, it can be very mm, detrimental for the company, and the company can be a loss by the use of those data, or it can hamper the company's reputation as well. So thank you so much. So this was for today. So we are going to talk about a different topic in next week, which will be module 3. So thank you for watching the video.